It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. As always, it's Tyrone Jackson, a wealthy investor, and thank you for joining me for this very special episode of Understanding Financial Planning. Now, I talk a lot on these episodes about trading in the stock market and covered calls and dividends and wealth building and residual income. Well, there's one thing that I bet you might not think, and I'm going to remind you of, is that wealthy people and people who become wealthy make money a priority. In other words, if you're only earning $7,000 a year, can you put some money away in a brokerage account or savings account? If you do, you are actually starting the wealth building process. You see, wealth starts with saving money, and then at some point you take some of your savings and you put it at risk investing. Now, obviously, I recommend that you invest it in stocks and in stocks that are members of the Dow Jones Industrial Average. But maybe you're not at that point right now. Maybe you're just putting money away in a savings account. Well, if you make money a priority, you will be in the process of creating wealth. On today's show, we have financial planner Winnie Sun, who is going to explain to us step by step what a financial planner does and how they can help change your life if you feel that you need that kind of guidance. So we'll be back in a moment with Winnie Sun right after you take a listen to this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
And welcome back. Okay, I told you at the opening of the show that you guys were really going to get exposure to someone who's a wonderful person when it comes to financial planning and helping her high net worth clients. And who am I talking about today? I'm talking, of course, about Winnie Sun. Welcome, Winnie. Great to have you here.
Oh, it is so great to be here, Tyrone. I'm excited.
And I know that your schedule is really, really busy, so you know how much I appreciate you giving your time and being a guest on today's show, right?
Oh, the feeling is mutual.
Okay. Now, let's get right into it, because really what I like to do with this show is not only inspire and educate people, but give them exposure to people perhaps who they would not meet in their everyday life. And you are a financial planner for high net worth individuals. What exactly does that mean?
That means that, my clients tend to be very, very busy people, and they're running major businesses or they're on television. And so they don't have time or energy to manage their own finances. So they come to somebody like myself to give them that direction.
Now, what is a high net worth individual for members of our audience who've never heard that term?
Well, a high net worth individual is someone really who, has probably a minimum amount to invest, at least $1 million maybe, and it goes all the way up from there. So they usually are either key executives at major companies. They could be business owners. They could be nonprofit organizations. They could be athletes. They're people that just have a lot of nuances in their own financial situation, so they need a professional to kind of help them manage their money.
Okay, and this idea of adding up your net worth was once explained to me in terms that I can understand, and I'll articulate it to you, and then you give me your feedback.
Please.
Okay, someone said if you took everything that you owned, your house, your car, your shoes, a life insurance policy, all of your furniture, and you were to sell everything, how much would you be left with? And that amount would be your net worth. Does that sound accurate?
That's your total net worth. And usually what I deal with is what we call investable assets. So it wouldn't include your shoes, it wouldn't include your car or your house, because those are not investable assets. So investable assets would be monies like at the bank, at your brokerage account, your retirement account. That total would be investable assets.
Okay, and so when you're dealing with a high net worth individual, when we say net worth and you say someone has $1 million, you mean $1 million cash or investable assets?
Investable assets, about at least, really for a firm like my size, we do primarily work with clients that have at least a few $1 million in investable assets that they can invest with us right now.
Okay. Now, in my world, I teach people, most of my students don't have $1 million, but they have something that they can actually start trading and investing in the stock market. When someone comes to you and they say, hey, Winnie, I have, $5 million in investable assets, what would you do with them and how would you start them off?
Well, our firm is all about financial planning. So we would start with a discussion of where they are today, where they like to be in the future, and what sort of financial goals they like to accomplish. So this could be something like, I want to make sure that my kids all have enough to go to college. I want to make sure that my parents are taken care of for as they get older. It could be a number of things. I have to have enough money to purchase this next building for my business. So we start with figuring out what those major goals are, and then, it could be something like I want to retire at a certain age, and then we work backwards to figure out what they need to do from today going forward to be able to reach those goals. So it's very much a planning process. So it's more about the plan than rather even the individual selection of investments yet.
And this clientele that you work with, how does some of these people get their money? I mean, are they people who started with very little, built a business? How do they accumulate such large amounts of net worth?
That's a good question, Tyrone. I mean, I think, in my industry, we always say, like attracts like. So I think a lot of times our clients will look very similarly to who we are personally. So someone like myself, right, who didn't grow up with a lot of money, parents didn't have a ton of money. Really, it's self-made. It's through owning various businesses. It's to a situation where we're great savers and where we're just very good in terms of how much we budgeted for our expenses. And so many of my clients are key executives at major companies that have just worked for a really long time. And they've made good salaries, they've got bonuses. Some of them come from the tech industry where they had a lot of shares in their company stock. I've had clients where they sold their business to another business or they inherited money. So I would say most of our clients, to give you an idea, are in the movie and television industries. So they tend to be key executives, producers, directors, that, they do pretty amazing things. So and that's why they get paid what they get paid.
And what's really interesting is, now I love the stock market, as most of my audience knows, and I can't imagine myself not managing my own money in a retirement account and then other accounts that I have. But very often a financial planner will put you in what we call a broad-based investments. In other words, you might be looking at a municipal bond, right? Some tax-free bonds for your clients, right? If they want more tax-free income.
Sure.
Explain to us how you would put together a portfolio of assets.
Well, the way we build portfolios is really, it stems from our initial planning process, right? So once we figure out what our clients need, so for example, let's say we find out a client, their immediate need is making sure they've had something stocked away for retirement, and then they want to have their house paid off. Then we figure out how much we need to save each and then every month or every paycheck to accomplish that goal. And then that money, which comes from their paycheck, which is invested in the portfolio, what sort of return we need to meet to achieve that goal that they can retire, let's say at 62, whatever that number may be, right? So let's say we figure out from there that the overall goal of the portfolio is to achieve at least 6% annual return. So if it's 6%, then we then go backwards and we build a portfolio that historically, over the long term should reach that 6% rate of return. And that's kind of how we do it, because our clients probably do like the stock market. They just don't have the time or energy to do it. So that is something that we would do for them.
I see. So in the world of self-directed traders, people like me, we can handle our own money because we have the time to do it.
Right.
The clients that you have, they're off making, $5 million a movie or whatever it is that they're doing. So money management becomes something that they need to hire a professional to do. Is that correct?
That is correct. I think everything's a little different. I think as you get to a certain stage, like we have many of our clients are this way. They're at a stage where they're just so busy. They're juggling family and work and everything else. They don't have time to manage their own money. And really, they need a sounding person to be able to give them guidance. And the investment selection is important, but probably more important for them is the planning process. Like how much goes into tax sheltered? How much should be devoted to long-term care insurance? How much for life insurance? How much will I be paying estate tax, or my children be paying estate taxes when I'm no longer here? So those types of things are very critical for the high net worth investor. So it's not so much that I bought Apple or I didn't buy Apple. It's that I need to make sure that everything is pieced out correctly, because for them, probably the biggest importance is taxes. How much am I paying in taxes, and how much can I shelter? And so there's a lot of planning that comes into place even beyond just investment selection.
Well, this is so interesting. And I'm so happy that you're here to really kind of break this down for us in little tiny pieces. So let me ask you this. Part of your job would be, you mentioned that 6% return annually on the money that they have invested. But you would also do something in the realm of insurance, right? Like you could put together a universal life insurance policy. So like when the guy who's made $5 million passes away, the insurance policy pays off the assets. I've heard that strategy mentioned before. Would you engage in that?
Yeah, absolutely. So I'll explain it to you this way. I'll give you an example. So me personally, like my husband and I, right? We have 3 young children. Now I travel all over the world like you do, and we speak everywhere, right? So I'm in a plane a lot of times. And every time I get to the airport, I worry if something were to happen to me, what would happen to my family, right? So that worry needs to be translated into action. And the action is to buy life insurance. You shouldn't buy life insurance just for the sake of buying life insurance. There should be a purpose and a reason to do anything that happens to do with money, right? So life insurance for me is if something were to happen to me, how would my husband and my children have that replacement of income? So I would buy enough life insurance while I was healthy and capable to buy enough insurance so that ideally, let's say I had a pool of money and it would pay out if I were no longer here. Then my family could live off that to provide for the things that I would want them to have, which is to be able to stay in the house, right? To be able to pay for college, to have like a decent life in the future in case I wasn't here. And that's how you do it. Life insurance is using a little bit of money and buying a lot of money in case something happens to you. So you can buy it for like a defined term, which is like term insurance. You could buy like permanent insurance. And permanent insurance has some nice features too, because again, you don't buy insurance just to buy insurance. It has to have a purpose. So when you grow your estate to a certain level, what's going to happen is, let's say like your children inherit your estate. Well, depending on where you are in the country, the state taxes can be pretty hefty, right? Could sometimes be up to 50%. So does that mean when your children get your money that they're going to have to pay 50% if your estate is large? Potentially. So instead of them paying, let's say your estate is worth $5 million when you pass away, or let's say $10 million pass away, and let's say your children will have to pay estate taxes of $5 million. Well, on top of them mourning mom and dad being gone, they got to come up with such a big chunk of money. That might mean they would have to sell the family home. It might mean a whole bunch of things that they're not ready for. Instead, you could actually buy life insurance to cover the state tax issue early on.
Right.
So if you pass away, then the kids will have enough money to take care of the taxes, and they could stay at home.
Now, you're saying a lot, so hold on, because I want to make sure that our audience really is able to kind of comprehend this. So, for example, if I had $10 million worth of assets, I pass away, I could have a $10 million life insurance policy, half of which would cover the estate tax, which is 50%. Is that right?
Yeah. Or you could even just buy a $5 million policy just to cover the tax.
Right.
It really depends on, what other things you have in place. So that's just an example of why these sort of strategies for many of our clients are even more important than the investment selection, right?
Oh, I see what you're saying. So you're saying sometimes the insurance strategy alone is more important than what you even chose to invest in.
Yeah, for some of them. Not everybody. I mean, a lot of them, some of these individuals have a lot in company stock, and they have high income and nice bonus packages. And so They know that they have enough money. They know they need to focus on what they do best instead of making. They tend to, it's interesting. People always say, well, when they have a lot of money, so they can take more risks. But that's actually an interesting point because most of my clients that have a significant amount of assets don't feel like they want to take that risk. They already have a lot of money.
Mm-hmm.
So making a lot of money from a lot of money isn't as difficult, right? You can just maintain and you can go a little bit more conservative. They rather keep it, go with something conservative, and have it planned out accordingly. But the biggest savings to them or the biggest benefit to them is tax savings. So some of these other strategies, it's like you're like, well, would they be happy with just like 5-6%? And some of them are happy with 3 or 4%. It's just because their needs are different.
Right. Now let me go back. So in other words, so insurance is based on your needs, right? Covering your family and covering your assets. That's one approach just to how and ways in which you can use insurance. I want to go back to something that you said, and because a lot of times people write in thewealthyinvestor.net and they'll say, "Hey, Tyrone, I have $8,000 to get started in the stock market, and I want to know how much I can actually earn from that." And my response typically is $8,000 is great because at least you have something to get in the game, but
Absolutely.
you must be willing to put at least $250 a month into a brokerage account to grow your money. And then people don't want to hear that because they want to hear that their $8,000 can make them $1 million. So I just want to go back to what you said, because I always say wealth is a series of positive habits. And
I love
even
True.
someone who has $1 million is still in the habit, Winnie, of putting money into an investment account, even though they've so-called made it?
Oh, absolutely. People who have wealth for a reason.
Mm-hmm. People
Who have wealth tend to be extremely disciplined in not only their spending, but also their savings. So you'd be surprised. A lot of people think that when they have a lot of money, that they spend a lot of money. That couldn't be farther from the truth. I have a very successful studio head, like a CEO of a major studio that we work with, who drives a Prius.
Mm-hmm.
And they make saving for their financial goals their priority. And they don't feel like that it's necessary to spend money on things that they can't take it with them anyway, right?
Mm-hmm.
So they're really big on giving to charity. They're really big about spending for their family and, some vacations. But you'll be surprised to hear that, at least with my clients, the ones that have done very, very well financially, they actually look like me. Like, for example, I drive a car that's, probably over almost 15 years old, right?
Mm-hmm.
And I live a very, very modest life, but I save a ton of money. And, I have 3 kids, and my oldest was about 2 or 3. His education for college I had paid off. So our priorities are very different. We give up on things that to us just don't matter as much, and we have the confidence of knowing that we have income coming in, that we continue to aggressively save, but not just save, but actually invest, which is really well.
I'm so happy to hear you say that, because sometimes people think I'm knocking them when I say, okay, you have to put yourself on an investment plan. And really what you're amplifying here today is that the idea is that, like, people who are wealthy on purpose. So no matter what level you're at, you're always putting a little something away, right?
Oh, not a little. Tyrone, these guys, if you're looking at them and you're thinking, wow, how did this happen? Mm-hmm. It's not by accident. These guys, they literally pay themselves tremendously. And of course, the numbers are bigger, but don't forget, it's interesting. People always say this, well, it's because they have a lot of money. Well, it's interesting because as you have more money, what do you also do? You pay more in taxes, mm-hmm. and your lifestyle changes. You become, you're a star of a movie. What happens then? Well, then you got to go to movie premieres, which you need more clothing. And you have a lifestyle to maintain. So there's still a lot of things pulling at you that the regular people like us don't have to experience. So they have additional costs. So they just made a very conscious decision, because they are very realistic of saying that many of them feel like they won the lotto. So they do feel like they got really lucky, and they worry that their luck will end mm-hmm. at some point. Mm-hmm. So they tend to sock a lot away. a big percentage. So let's talk about percentages, not even so much income, because that's usually the thing. The name of the game is percentage. So I remember when I was making like $7,000 a year, and I was like, I was putting away maybe 10%, 20%, and then as you increase in income, how much are you putting away when you're making $20,000 a year? Are you still doing 20%? If you're not doing 20%, then you should, right? Either that or find another side job and make some more money. So it's not about how much you make; it's a percentage that you save.
God, that is so true. And I have found that out from my own experience. I find that there's just, even if you're just making $30,000, $40,000 a year, there's a certain magic that comes from saving or investing $300, $600 a month. And I always say, Winnie, wealth is a feeling first, right?
Yes.
So when you put that money away and you have some sense of, there's some cash somewhere that is working for me, that actually feeds the habit. Right?
Yes.
And what
So
you're saying
true.
is no matter what level you're on, that feeling of, there's some money somewhere working for me continues when you do it in percentage terms, whether it's 5% or 10%.
Yeah.
Is that correct?
It sure does. And if you think about it, especially like when you're younger or if you don't have as much income, if you put a nice percentage and then instead of just putting in a regular account, maybe you put it in a tax-deferred IRA account, now you get extra bonus, right? Not only do you have money working for you, but you get a tax shelter and a tax benefit. It's like a win-win. So it's just getting really smart and just saying, okay, no more excuses. Okay, the 8,000 is great, but I could do better, and I deserve better. And so therefore, I'm paying myself first, before all y'all.
Very good. Now, let me ask you something. This is going to be personal about my history. When I was growing, I grew up with a mother in federally subsidized housing, right? So our biggest priority was just paying the rent. And I realized I needed a mindset shift. I needed to at least pretend I was wealthy. So I opened an account in a mutual fund because I could put in $25 a month.
Yes.
And, along the way, when I was coming up, I met a bunch of people who were trust fund babies.
Yeah.
And I was like, what is a trust fund? Can you explain to our audience what a trust fund is and
Sure.
how you could set that up for your child or grandchild?
So, Tyrone, I'm with you here. I mean, like, my parents declared bankruptcy 3 months before I started college, so we had it rough, too. So I completely understand of meeting these trust fund babies. I had them all through college. But how it works is this. So let's say you've accumulated some wealth and you're now successful, right? So you obviously want to plan for your children in the future, if you do. And then what you do is you would meet with an estate planning attorney. Really easy, just Google an estate planning attorney, find one that you trust, and you have them help you set up a living trust and a will, like a portable will, to cover you in case something happens to you, right? Or when something happens to you. So then from there, a portion, let's say like, my husband and I are no longer here, then our monies would be dictated based on the requirements that we put into the trust, right? This much goes to my oldest, this goes much to my parents, whatever it may be. So then from there, they would have access to those monies after any taxes were due, and they could use it to take care of themselves based on the outlines that I've laid out on the in the trust.
But you can instruct the trust to only pay out $2,000 every 3 months, right?
You can go so detailed. Like I have a client. I'm not suggesting you all do this, but I have a really interesting client. She definitely wanted her children not to be like morbidly obese because she was like really into dieting and health and all this stuff. So she even went to a detail of saying like, well, if you gain this much, then you're going to get this much. But if you lose this much, you'll get... I mean, I'm not suggesting you do this, but this is how detailed some people go. One thing I will tell you that I did in my own trust that I'm a big believer on, I am basically going to, for my kids, I'm going to match them dollar for dollar on what they earn. So, because I don't want my kids to just be living off my money and not pursuing greater, for themselves. So if I have a child, for example, that's going to really work their tail off, start a company, and they're going to make, maybe $100,000 a year, then I'll match $100,000 a year if I have the money in the future, right, to be able to do that. And if I have a child who really just doesn't want to and just wants to be an artist and does whatever and make nothing, then I'll match that nothing, right?
Right.
So I didn't want children that became dependent on that money. I wanted children to want to learn the skills to be able to manage the money properly and respect how hard it was for us to build it, in our generation, because it's not like we came into any money.
Right. So can anyone start a trust fund?
Pretty much anybody can start it. It's really as simple as having an attorney draw up the documents. There's even some online programs where you can actually do it online, or I think you can even go to Costco and get software to draw up your own trust. So usually I would say that if you do have some estate, meaning like, let's say you own your home, right? Mm-hmm. And you have a little bit of monies to your name. And if the attorney isn't too expensive, then that's probably a good way to go. But if you just want to have something that's better than nothing, then you can do it online, or you can go get some software to do that. And a lot of companies now offer legal plans, so you should look into that to see if your benefit program offers it. And then the company actually covers a good portion of that cost.
Okay. So if someone doesn't work for a company that will cover that cost, they can find someone like you or an estate planning attorney, as you said, and they can set up this trust fund.
Yeah, I don't draw legal documents, but I do have a lot of people, a lot of experts that I do know that can, and I know some very, very reasonable attorneys who are really good that I've known for many, many years. So, yeah, I definitely can point you out to the right person. But you definitely want to find someone that you're very comfortable speaking to. And it's not just you, but also if you're married, your spouse should be comfortable working with that person as well. Mm-hmm. And I always tell my clients this. I'll tell this to your listeners as a little secret tip.
Okay.
I always think that when you meet with an estate planning attorney, up front, you should say, like, how much is, to get everything done, the trust and the will, the whole package. Also, can you throw in like a few hours of free amendment costs? And why that is because when you do your trust, when you're meeting with a trust attorney, it's kind of a little stressful, right? You're thinking about what's going to happen to your money when you're not here anymore. And you don't ever think about that you're going to want to make changes. But I'll tell you, 9 times out of 9, a year later or 2 years later, you're going to be like, oh, I should have picked this person instead. I should have done this instead. And then you have to go back to the attorney, and they're going to charge you like an hourly cost. So I always say up front, ask for, say, up front, you're in a good situation, you're happy, you're like, can you throw in like 3 hours of amendment costs because I might make changes? And usually the attorney will, because they want your business, is just going to say yes no matter what in the beginning. And it'll cost you like nothing, but just have them write it into your contract.
I love it. I'm so happy you said that because that's something I didn't even know I could do. So see that? I'm also the teacher, but I'm also the student. Well, Winnie,
I've learned so much from you last time I met you, so small things I can do for you.
Well, thank you. I really appreciate that. So, Winnie, let me ask you another thing, because another thing that I have my students do, especially when they become successful traders, is I have them open up brokerage accounts for their kids. So that they're not only trading for themselves, selling covered calls and collecting dividends, they're also doing it in an account with their child's name. Can that account also roll into a trust?
Well, a trust is really just so you got to think about what a trust is. A trust, essentially, while you're living, is just like having a beneficiary designation on an account. Okay, so if the child's account is in trust, it just depends. Is it under your name still, or if it's under a child's name? If it's under a child's name and you want it under trust, then the child themselves has to have a trust.
I see. So the child themselves and is that trust revocable?
It can't be.
Okay.
Usually they are revocable as long as you don't make it irrevocable, and that's something you want to talk to the attorney about. There are some benefits to going irrevocable, but typically you don't see that as common until the situation is a little bit more complicated, like the state's maybe bigger, or you have children that have special needs. Then there might be some more reasons, but I would say the vast majority of people have fully revocable trusts.
Okay, perfect. Well, so today we learned about why someone would go to a financial planner, that for many people, insurance is a part of planning for the future, and estate planning can encompass a lot of things, but it really depends on your goal. And so it can be really tailored to what a husband and wife's future looks like, or what you think it can look like, et cetera, et cetera. And those are some of the reasons why someone would go to you, right?
Yes, thank you. Yes, that's why you come to me when your situation is probably a little bit more complicated and you feel like you just can't do it by yourself anymore. Then it's time to talk to us.
Fantastic. Now tell us about the Renegade Millionaire podcast. What is that?
Well, we'll have to have you on the show one day. The Renegade Millionaire podcast is my podcast, and we showcase various entrepreneurs and talk about where they were before and how they got to where they are. We interview a whole bunch of celebrities, including Damon John, Brooke Burke, and others. So it's a lot of fun.
Well, and they can find that on iTunes, right?
They can, on all the various podcast channels.
Wow. Hey, listen, Winnie, will you come back and help us with this education a little bit more in the future?
Well, we're good friends, so anytime.
Because I love it. I mean, I love for people to have the opportunity to hear these terms clearly explained, because a lot of people feel overwhelmed by financial planning. But if they connect with someone like you, they don't have to, because you keep it really simple. So for that, I thank you.
Thank you, Tyrone. I appreciate that. That means a lot.
All right. Well, it's been a real pleasure having you, and we'll check in with you in the upcoming months. You'll be a regular on the show. How's that?
Woo-hoo! I love it. Thank you so much, everybody.
Okay. Thanks, Winnie. We'll be back right after this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
And that was my interview with Winnie Sun. Isn't she great? Hey, listen, this is one thing I want you to get from this podcast. This is your number one place for getting a financial education. And yes, the show is Trading Stocks Made Easy, but every once in a while, I'd like to take a detour, and like we did on today's show, so that you get to learn what a financial planner does. If you want a little bit more information about how to trade in the stock market, please make sure that you join me over on thewealthyinvestor.net and join me right back here for the next episode of Trading Stocks Made Easy. It's Tyrone Jackson, the Wealthy Investor, saying I'm always on your side, always in your corner. Keep an open mind, stay positive, and positive things will happen for you in your life.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.